Welcome back to Ozarks Live. It's time to get the latest financial advice in this week's Dollars and Cents.
We go out to Tom now, who is live from the Resource Center. Tom, how's it going?
Things are going fine. As a matter of fact, when you look at the name of this place, the Resource Center, well, one of the meanings of resource is being able to tap into resources throughout the community, the professionals, the people who know. And I have one of those people with me, Aaron Jernigan, and he is the president of mortgage banking with Oak Star. Thanks for coming in.
Thanks
Appreciate
so much.
it.
Enjoy it.
Give folks your pedigree. How long have you been in this form of banking?
So I've been in mortgage banking for, this will be my 28th year, and I've been with Oak Star Bank for 13 years, coming up this December.
So you're not exactly a rookie on this kind of
This
thing.
is about the only thing I know how to do, so.
Okay. You know, we're hearing a lot about mortgages, this, that, and the other thing. What is the current state of mortgage rates?
So right now, the current 30-year fixed rate is in the upper 5% range, which, you know, as opposed to just a year ago, just in July of last year, it was in the mid 2% range. So that's a pretty big increase over really just a 12-month period.
Obviously, what is moving these rates? What is causing this swing?
Well, so right now, in a couple of data facts that came out this last week, for new home sales, and this is a nationwide number, the new home sales have declined by 29% from last July, so July of 2021 to July of 2022.
Almost a third.
Yeah, and so in the same chord, the supply of new homes for sale, it has increased by 10%, and we haven't seen that since March of 2009. So looking at both those numbers, there's a lot of people who might go, oh my gosh, that's a negative number, but we look at it as it creates a more healthy environment for housing because it allows for first-time home buyers, FHA home buyers, VA, USDA home buyers to get into the market and get offers accepted.
Well, things like that, I mean, it's a wave and it can be cyclical. So right now, because of what you just said, would you say that leans more toward the buyer or the seller?
Well, for the last 2 years, you would call it a seller's market because rates are really low, the market's hot, and it's shifting now more towards a buyer's market. And again, I would call that a very healthy environment.
So, okay, what does this mean then to the buyer?
Well, so right now for the buyer, it's more about like we have to look at like affordability, and you know, someone that was approved to buy a house, let's say somebody was approved to buy a house for $200,000 at say 2.5%. Well, they turn around and now they're still looking, but now the interest rate's 5.5%. I mean, that's a big difference. So we encourage all of our clients to just look at their payments, meet with their mortgage lender, find out what the payments are for that specific purchase price, and then look at their budget. That's super important because that has certainly changed over the last 12 months.
But, you know, although rates are going up, mortgage rates a little bit, because it's a seller's market, they may be able to get more home than they could have before as well. Kind of balances out that way?
Yeah, well, right now, I mean, anytime interest rates go up, the affordability changes. So they're actually probably not going to get as much house unless values come down. And now we've seen values come down a little bit nationwide, but not a plummet like we saw, several years ago.
Okay, now the other thing that people look when it comes to rates and percentages are prime, the prime rate. So what happens as the Fed increases the prime, because we're hearing and seeing that going on?
Yeah, that's a big topic right now. You're seeing all over the newsways. Prime's currently at 5.5%. It has increased by the Fed in the last several meetings. It's going to increase more, what they're projecting. Prime doesn't really have any direct effect on mortgage rates. It more affects items like home equity lines of credit, credit cards, car loans. So those rates are going to go up, which we call short-term rates. But what also goes up, I always try to remind people, is that deposit rates are going to go up as well. So it's not all negative when prime increases. People always focus on, oh my gosh, my car rate's going to go up, but also your deposit rates are going to go up as well.
Okay, so it's nothing. If you hear the prime going up, you don't need to panic when it comes to mortgage, but you do need to pay to all those other things that you may be involved in.
Yeah, I think paying attention to the market and what's going on and paying attention to what rates are doing, looking at your budget and just making good decisions. This is not a panic situation whatsoever. We've seen rates much higher than this.
Yes, well,
so
yes.
we're in a really currently a great market.
Okay, if people are looking for advice, mortgage, how do they find you? What do they need to bring to the table?
Yeah, so my office is at 1020 East Battlefield, Oak Star Bank. I'm on the second floor, and they can call me directly at 447-9550, or they can look at my website, aaronjernigan.com, or they can reach me by email at aaronjernigan.com or ajernigan.com at oakstarbank.com.
Right.
Or ajernigan at oakstarbank.com. A lot of information.
Oakstarbank.com. Okay,
Correct.
so you have a lot of questions. He has a lot of ways to reach him. It's pretty easy. Aaron, thanks for being with us. We appreciate it.
Thanks so much. Appreciate it.
Back to you guys.
The housing market has been very strange in the last couple years here, and so I feel like it's so necessary to have a professional help you through it. I mean, even in just the last few weeks, I feel like it's changing again. So
Yep.
necessary help right
Yes,
there.
get the professionals to help you out and get the right advice.
Exactly.